All right, guys. Good evening. I hope you are all fine, and I hope you had a good day. And I'm also fine. And whilst everyone is still joining in, I hope everything is okay on your side. Please, if you can hear me, can you just confirm on the chat page that you can hear me? Just confirm on the chat page that yes, I can hear you before our brother starts. If you can hear me, just confirm that you can hear me. All right. Thank you so much, guys. Thank you so much. So without wasting much of the time, I'm going to give him the floor so that he take us right through for whatever he has prepared for us. So please, let's support him likewise and be with him throughout the whole session. Thank you.
Okay, hello guys. I hope I find you well. Today we're going to be doing a price action. Can you confirm for me that you're hearing me on the chat? Can you confirm for me that my sound is okay?
Yeah, we can hear you. Your sound is very much okay, sir.
Okay, so we can wait for 100 or I can get started now.
Yeah, you can proceed. You can proceed, sir.
All right, so today we're going to be concentrating on price action. Whereas it is the study of price, we are looking at price, trading price mostly. Therefore, we'll be using support and resistance, trend lines, higher lows, and patterns. So I'm going to be doing patterns today, mostly patterns. That's what I'm going to concentrate on. So before we get into our patterns, I would like to start with something. Candlestick patterns, candlestick patterns, candlestick patterns, candlestick patterns, candlestick patterns, right? So candlestick patterns, these are the ones that give us confirmation and price action to enter the trades. So obviously I'm going to concentrate much on the reversal candlesticks that we have. So I'll start with explaining what a candle looks like. Start by explaining a candle. All right, just start by explaining a candle. Okay, I think you're all familiar with something which has this structure. You're all familiar with the structure. So right guys, here I have a candlestick. This is a candlestick. So on a candlestick we have the body, we have the shadow or the wicks, shadow or wicks or tails, right? So here is the body, here is the shadow, right? So this is the shadow. So we are saying price went all the way down to this level, and then it continued and went all the way up to that level again and closed here if it's a bullish candle. So if it's a bearish candle, it opened on this side here and went all the way down to this level and then retraced. So whilst it was retracing, it closed here. So these candles are usually we have what we call time frames. So if you go on 1 hour time frame, you'd find there's a 1 hour candle there. So each candle on 1 hour time frame is 1 hour long. Each candle on 5 minutes is 5 minutes long. Each candle on daily is daily long. So these are candles. So meaning if I'm on 1 hour and this is a bearish candle, so meaning at 1 o'clock it opened here. Then when it is 2 o'clock, it then closed for this level here. So this is how our candlestick forms, right? So I'm getting into the reversal candles, the one that you use to enter trades, the one that you use for confirmation. So I'm going to start with the Doji. I'm going to start with the Doji, right? So a Doji, it looks like a cross like this, basically a cross like this. So this one is saying it opened here and closed at the same level. So it's saying the buyers came in the market and pushed the market up. The sellers came in the market and pushed the market down, right? So this may mean that there is indecisiveness in the market. This is called by indecisive in the market. It usually forms at resistance or at support or at any pivotal points in the market. So when a doji forms now, it shows that there might be a reversal in the market, but it does not confirm that it's a reversal. This is an indecisive candle. So meaning it's not 100% reversal candle. You can put it at 50%, 50% probability of reversing, right? So it shows that there may be 5 buyers and 5 sellers, or there are no buyers or there are no sellers at all. We are waiting for the next candle to come so that we sell. We either sell or we buy as according to where we are in the market. So that is basically a doji. So under a doji, we have two types of dojis. We have a gravestone. We have a gravestone doji. We have a gravestone doji. So a gravestone basically looks like a grave on its own. I think we all know what a grave looks like, something like this, right? So at times it does have a small tail like this. At times it does not have a tail. It does not have a body also. So looking at it now, this shows that there is a doji. This first doji that we have, we said it's indecisive, but this one now has a decision. Now it's different from this one. This one has a decision. So this gravestone doji, it's saying it's going down. It shows that there were sellers in the market. Sorry, there were buyers. They bought the market all the way up, but then the sellers came in and drove the price all the way down, which is shown by this long rejection of higher price. So this is basically a long rejection of higher price. So whenever you see a gravestone doji, you know that the market is selling. That is confirmed. So let's not waste each other's time. So I'm only going to do the bearish reversal chart patterns. So you go look for the other doji. You go look for it on your own. So let's get to an engulfing bar. So basically we are bearish. So this one is bearish engulfing bar. Right. So let me draw structure. Okay. So this one is made up of two candlesticks in the market. It is made up of two candlesticks in the market. It's a two candle structure. So it looks like this. Then see, this is a bearish engulfing. Okay. I think this one used to be a bit bigger. Right. So this is a we have the first one. This is a bullish candle. Then after the bullish candle came in the bearish candle. So the bearish candle is showing that there is momentum of sellers in the market. As you can see, it has a bigger body than the first structure here, which is the bullish. So this one basically shows that there is momentum of sellers in the market, and then the market is about to sell. So get this straight now. You do not enter these structures anywhere in the market. You look for them at pivotal points where we say the market is about to reverse. That's when we look for these structures to enter the market. If you get your structure on daily, meaning you have to wait for an engulfing bar to form on daily so that you enter you enter the market on the next candlestick. If it's 4 hour, you wait for the 4 hour to form the structure so that you enter the market. Understand? So that's an engulfing bar. So from an engulfing bar, we are going to a dark cloud cover, right? So a dark cloud cover, it is also made up of two candlestick. As always, one bearish and one bullish. One bearish and one bullish. Okay. One bearish and one bullish. Right. So this is a dark cloud cover. So when the Japanese named these candlesticks, they were referring to the things that we know in real life, something that we really do understand. When we see a dark cloud cover in the sky, we actually know it's about to rain. There is rain coming because the blue sky will be covered by that dark cloud cover. Therefore, there is rain coming. So when there is rain coming, as we are referring to the market now, the market is now selling because it's going down. The rain comes from the sky going down to earth. That is the same thing that is meant by a dark cloud cover that comes and covers the sky. Then when it covers the sky, what follows is the rains. So that's where they drove this name from. They derived it from there. Then so now this is usually caused by a gap in the market. That's when you usually find these setups, or there was so much momentum in the market that the market for the next candle, when the next candle formed, it jumped a bit. I think you've seen gaps and jumps in the market. So that's when this dark cloud cover formed. So this dark cloud cover, for us now to confirm that it is one, it has to be at least 50% inside the green candle, the bullish candle. That's when we confirm that we have a dark cloud cover and we know we are now selling. That's when we know we are now selling. So look at this at the pivot points in the market. As long as if it's not the pivot point in the market, we don't enter anything. Okay. So that's the cloud cover. Right, let's move to the next structures. Move to the next structures. So from a dark cloud cover, we're going to go to an evening star. Evening star. Right. So an evening star, it is made up of three candlestick pattern. It is a three candlestick pattern. Three candlestick pattern. Right. So as always, we have our bearish on this side. From our bearish, we're going to go to our going to have the next one. Yeah. Okay. So in the middle here comes any small candle in the middle here, any small candle here, and a small candle. So an evening star is more like the shooting star that you know in the sky. So as you know, a shooting star, it shoots from the sky going down to earth. So that's when it's when you see it like the shooting part, it's when it's burning. So that's when it's going down. So this is an evening star. Some people call it also a shooting star pattern. So we are basically saying you have to wait for these candles to form. So we have the green candle here. Then we have these so here in the middle comes any small candle, in the middle here. Here comes any small candle in the middle here, then we know we are selling. we are selling. So that's an evening star or a shooting star. So I'm gonna do the last one. So this one, people call it a hangman, hammer, and everything, but I just call it a pin bar. A pin bar. I basically call it a pin bar. Right. Use a pin bar. You're going to have this long wick, then short wick here. So this long wick here, it's showing market rejection. It's showing market rejection. This long wick here, it's showing market rejection of higher price, and then we are going down. So this basically shows that there were buyers in the market. They pushed the price down, but however, the sellers came in the market and pushed the price down. So we are waiting for new sellers to come, and then we sell with them. We start going down with the market. So this is a pin bar. This is a pin bar, right? So for me, basically, those are the most powerful that I know, the ones that forms every day for someone that uses price action. So all right, that was on candlestick. Candlestick. So now we can move on to chart patterns. Chart patterns. Chart patterns. Right. So basically on chart patterns now, we are going to go talk about the patterns that forms in the market, the one that have been back tested for years, the one that has been used for years. So what we are going to do is I'll draw a chart pattern, then I go and show you a back testing on that pattern. So I'm going to do mostly bearish chart patterns. You guys go, I can say it's your assignment, you do the bullish ones. Okay. So under bearish chart patterns, we have what we call continuation chart pattern. We have reversal chart patterns. Those are what we have in the market, continuation and reversal. So I'm going to start with continuation patterns. Going to start with continuation patterns. Okay, I'm going to start with the continuation pattern. So under continuation patterns, we have what we call a flag pattern. This is my favorite flag pattern. This is my favorite structure. This is my favorite structure in the market, right? So this basically resembles a flag in real life. So this is what a flag looks like in real life. We have something like this, real life. So this is our flag in real life. So this is the same structure that we are going to have, but the only difference now is in the market, it will have another flag. It will have another flagpole like this. So which shows the continuation part. So the continuation part, you are saying the market is starting from here, it goes to here. So this part here that we have, it's consolidation in the market, which forms the body of a flag. Then we expect the flag to go up again like this. So this is a flag pattern. Okay, so let me draw. So I'm going to do a bearish flag pattern, right? A bearish flag pattern, something like this. Okay, here pattern is gonna break out, goes back for a retest, continues down in the market. Okay, here, stretch it out. Here, stretch it out. Okay, back inside. So now this is how price will be behaving inside the pattern. We have price doing this. So a flag is basically formed from price in the market, price made up of candlestick. So that's why we say price action is the study of price without any indicator, right? So I'm gonna start counting. So when trading these structures, we have rules. We have rules of trading these structures. So you're going to count 1, 2, then you draw your first line, this one that I've drawn, then I go down again, I count 1, 2, then I've drawn the other line. So meaning I'm waiting for price to come and hit here, which is this level here, then I start selling here. So this is where you start selling. This is where you start selling. So a flag you sell at the third touch, right? It's gonna go down to this level. So at this level, yes, you know the market is going to buy, but you are not going to buy. You are not going to buy. You're going to wait for the market to reach here so that you sell. Why? Because if you buy here, you are going against the trend. The trend on its own, it's a sell. It's a continuation for a sell. So we know we are selling. So there is no need for you to look for a buy. Wait for the structure to form and sell. The main reason why you see most traders lose money on the market, it's because the trend, you know, it's a sell, but you want to buy the retracement. The retracement is dangerous because the market does not obey a retracement, whereas I'm saying it might not reach this level here. It will just break from that level and starts going down. Maybe from here you've bought here, then from here it starts to sell, and then you are in a buy. Obviously, you're going to get your stop loss hit. Understand? So don't look to buy, because at times the market wants to gain momentum by going up before breaking the structure. Understand? Then, so, right. Another rule is whenever the market breaks a level, it always comes back to retest the broken level. So let's see. This is our broken level here. Let me redraw this line. Should reach here. Okay. These are the line. Reach here. Okay. So just know whenever price breaks a level, it always comes back to retest. So here is our retest here. So meaning I'm going to enter 1, the market goes down. This is my sell. Then when it reaches here, that's where my take profit is. I close my trade. So if I enter 3 here, I put a take profit for the for 2 here. I have to put take profit for 2 here, so that when the market reaches here, I've put a take profit for 2, so that at times it might seem as if it has failed to break, then it finally breaks. So this trade, you close it when it's halfway here. When it's halfway, that's when you close the other trade that you would have left, because it will come back and hit your stop loss from there. Then you wait for it again to sell. So when it sells again at this level here, you put as always take profit for 2, right? If it finally breaks, meaning you are now waiting for the retracement to add more positions in the market. That's how you trade a flag. So quickly, I'm going to do a back test. Going to show you back test. So back test, basically we are going back with our chart. We're going back in the past to see if the structure has been forming, or it only started forming now, or it's only me who sees it. So let's go back. Let's go back. Okay. Redo my template. So as you can see, this is my chart. These are trade, no indicator. So I'm gonna do a back test. And another thing that I did not mention, your flag body lines have to be parallel. Your flag body lines have to be parallel. So this is the pole here. Then after the pole, I'm gonna go here. Say it's continuing down, right? So I'm going to count 1, 2 here, 3. Then I sell. As you can see, it broke out. Then I'm waiting for a retest. So retest comes in 2 ways. It's either it comes to test the broken part, or it tests your line. Then you enter another sell on this line here. Then you wait for your take profit. So take profit, sometimes it's not defined by the structure. It's defined by your risk management. Sometimes defined by your risk management. Okay, let's see if I have another flag. So here, this is my parallel structure. My parallel structure. Then I sell 1, 2, 3 here. Then I sell. Then at this stage there was no retest, so meaning I just waited for my TP to be hit. Okay, so let me do the last structure. Last structure. So let me see what we got here. What we got. Okay. So this structure, it's not parallel, so I don't trade structure like this. If it was parallel, yes, I would trade. I don't trade if it's not parallel. Only trade parallel. 1. Okay. Structure. Right. Perfect. Then the pole. So I'm saying 1, 2. So meaning I'm going to use 1, 2, and I join my line. I use 1, 2, and I join my line from the downside. So I'm waiting for this third touch to come. This is the third touch that I'm waiting. Then I sell at this stage. When it reaches here, it failed to break. I close my trade. It goes back again to that level. So can you see those candlesticks that we did that I was talking of? So for you to sell here, you saw there was a evening star that formed, but now you need to see it before it forms. You need to have an eye to see this might be an evening star forming, because if you're going to enter the trade here, you're only going to get a few pips. Let's see how many pips you might get. That's like 20, 25 pips. That's a few pips. So also we can use, as you can see, there is a pin bar here. There is a pin bar. That's what you can use to enter your trade here. Then it sells here. It failed to break. Then your 2 trades hit TP here. Another one will hit a break even in the middle here. Then here also you'd see there is an engulfing bar here. There is an engulfing bar. Then you sell. So when you sell, you're waiting for the breakout and retest. Remember, I talked of a retest. Then the market broke out and came back to retest on the structure, and then it continued down. So that's basically a flag. Let's get back to our drawing board. So that's a flag. So like I said, I'm only going to be doing the bearish structures only. So this is a flag or continuation pattern, right? So another continuation pattern, it's a pennant. It's a pennant. So the pennant is a very small. Some they say it's a peanut because it's a very small structure. It's a very small structure. So it's like this. We're going to have the pole. We're going to have the peanut forming like this. Then it continues down. Here. Price will be playing inside structure, then it breaks out. Then structure breaks out. Then draw another one. This is a pennant. These are all the structures, forms. All right. Then it breaks and continues down. And another structure, it might also come in form of a flag, a very small flag, because it's a consolidation. So continuation happens after the market has been consolidating. So this is a consolidation of the market. Then we continue down, go up like that, then down. But this one, it looks like a flag, but it's a very small flag. Okay. So this is basically a pennant. So pennant is, for me, I only use them to look for the direction of the market. If I'm in a sell, when they form, I'm so confident that the market will continue going down. I don't usually enter them. I don't usually enter them in the market. Okay, I think I have one here. I have one here. So positive flag. Then I got into a pennant. Okay. So there was a fake breakout there. There was a fake breakout. And for fake breakouts, I'll just stop hunt. Here I have my pole. I have another pole showing the continuation market. Pennant. Okay. I have confidence that the market will continue going up. This I have confidence the market will continue going down. Oh, sorry, I haven't been sharing. Noticing it now. Okay, sorry. Okay, I'm here. Sorry. Let me redo. So I'm here. At first, we had our first flag here. Did a backtesting. Did our first flag here. That we confirmed the sell. Then from that flag, I had this structure. This. So here you can see we have our pole. This is our pole. This is our pole. Here goes down. So it goes to that level 1 here, 2. But this one, like I said, I usually look for it so that I see the direction of the market. I usually see it so that I see the direction of the market right here. So this here, what happened here was a fake breakout. It happens, the fake breakout, then the market continued down like that. So that's my pennant. Another pennant here. Another pennant here. So guys, as you can see, you can trade any currency, even one currency, for days, because you see there is continuation everywhere in the market. There is continuation everywhere in the market. Market reversed here. I think there was a support or anything, then it continued to go up. So this one, they confirm you for mostly, we can say, continuation of a pattern. Then we go here, we can look for a retest again. Also it does a retest. Can you see? Broke out, retested here, broke out, retested, went up. So meaning if you miss the third touch from the inside of the pattern, 1, 2, 3 here, I've entered my buy, it breaks, I wait for a retest here, I enter my retest, then I go up with it. That's it. So you can see you can enter the market everywhere. So this is based on, I trade, I go on weekly, daily, 4 hour, then 1 hour. That's where I mostly trade. So on 1 hour, that's when I look for my entry, because I'm a swing trader. I hold trades for days. Okay, I think I have another one here. Okay, perfect. This is another one. 1, 2, 3. You have entered here. you have sold here. See your sell go, it goes down with you. So price action brings more opportunities to enter in the market. So if you fuse them with market maker and ICT, it will be a bomb. So I've done a back test. Let me do another one. Most one on this one here. So these are peanuts everywhere in the market. So for one who have mastered market maker, you can use price action to mark your levels. So to understand continuation in the market. 1, 2, 3 here goes down, fail to break, but these are small pips. You cannot like close anything, just wait for it to break and then continue to go down. So that's a peanut for you, or a pennant. Okay, let's get back to our drawing board. Get back to our drawing board. So we're talking of a peanut. Okay, so next one I'm going on here from a pennant. So I'm going now. So those are the two reversal patterns that you have in the market. So I'm now moving forward to the reversal chart patterns. I'm going to start with just right triangles. I'm gonna go on triangles. Triangles, right. So under triangles, I'm going to start with the one which is a symmetrical triangle. Symmetrical triangle. Symmetrical triangle. Right. So a symmetrical triangle, it looks like what do you call this in maths? An equilateral triangle, right? An equilateral triangle. So I'm going to draw it for you. So this one, it's a reversal. It can be a reversal. It can be a continuation. Continuation can be, but mostly we use it for reversals, right? It's gonna do like this. A symmetrical triangle. This is how it forms in the market. Okay, boom, then boom, it breaks. Then when it breaks, usually price comes to test where it broke out like that, then it continues down. So this is a bearish symmetrical triangle. So someone now asked me, okay, how do I notice that it's going to break from the downside? So usually a symmetrical triangle forms at a major support, whereas the market wants to reverse. So we're going to count as always. We use our rules: 1, 2, 3. I enter here. So this one I don't close my trade. Maybe I can just close so that I increase my lot size here. Then it breaks out. You enter the reaches. Simple as that. So this is a symmetrical triangle. This is how it looks like. So I'm gonna go back to my backtesting. Okay, backtesting. Right here on backtesting. So I think I can get one from here. I think I can get one from here. Okay, I've got one from here. Then here. So the important part now, it is the downside. This one that I have, it's one for a buy. This is a bullish symmetrical triangle. So as you can see, I'm going to count 1, then I only have 1 and 2 only. I don't have 3. 3 did not come, so it left. So meaning I did not trade this structure. I left this structure to go. I move on, right? Then move on, looking for my structure. looking for my structure. So I can see somebody asked, what if it makes a false break then break to the top? So that's when you get your stop loss hit. There's nothing that you can do when you get a false breakout. So now a false breakout, it's mostly because it's a stop hunt. A false breakout, it's a stop hunt, guys. They are hunting your stops. So you need to hide your stop loss. You need to hide your stop loss. I'm not sure if I'm going to get time to show you how to hide your stop loss. So 1, 2, 3, I buy here. It failed to break here. It goes down this level. I buy again. As you can see, for me to buy, there's that candlestick reversal that you needed. Here you see the bullish engulfing. So the market moves with patterns. For you to buy, you need to wait for this candlestick. So you know it's gonna sell from here down to here. But if your structure, if it's a buy, you look to buy only. So right, somebody is asking me, do these chart patterns apply to all time frames? Yes, these patterns, they work on any time frame. They work on any time frame. Any time frame. But I'm a swing trader, obviously, so I'm going to use higher time frames to trade. 1, 2, 3, breakout, retest. This was a nice retest. You enter the market happy. This is when I open those lot sizes. I'm not encouraging anyone to open those lot sizes, but this is when I open those lot sizes on this one. Then I know it's selling. Then I sell down with the trade until I reach my target. So that's on symmetrical. I've backtested. Okay, I have another one. I have another one here. So the more you do backtesting, the more you get familiar with chart patterns. The more you do backtesting, the more you get familiar with these things. So 1, 2, then I was waiting for 3. 3 did not come. Then boom. So this was not a retest. This came in as a retest. So what happened? This one was a stop hunt, a false break in, like the one that was been asked, a false break in, which caused a stop hunt here. Obviously, because people had entered their buys based on these ones here. So it came back and hit them before it continued up. So this is symmetrical triangle. We go back to my chart. Need to go back. Okay. Whiteboard. So that's basically a symmetrical triangle. So from a symmetrical triangle, we're going to have a descending triangle. Descending triangle. Descending triangle. So descending triangle, we will have a support, and then we have price hitting a slanted resistance. Our resistance in this case, not horizontal. So this one is a pretty obvious chart. Price will be doing this inside these patterns. Price will be doing this. Obviously, you're going to have a breakout. Comes in, goes back up again, then it continues down like that. So on a descending triangle, we're going to, like always, guys, like always, we count 1, 2, 3, we sell. Comes here, you might close half of your trades. You enter more trades here, you increase the lot size because you've made profit here. You increase the lot size here, you close, increase the lot size, breaks out, you increase the lot size again here, then you go down with the trade until you reach your target. So this is basically a descending triangle. So I'm gonna go on my chart and look for a descending triangle. So what I'm basically doing is backtesting. So because I've been backtesting for years, now I know and I understand which currencies mostly forms flag, which currencies mostly forms descending triangles, which currencies mostly forms ascending triangles, which currencies mostly forms head and shoulders. Okay, so that's how you get to master the skill, and then money will just follow you. So as you can see, I'm looking for my descending triangle. Looking for my descending triangle. Do I have one here? Yes, I do have one here. I do have one here. Okay, sorry. So we do have one here. I'm very sorry. Yeah. Okay, we do have one here. I think you can now see my chat. I think I've shared to everyone. So we are here. The price, it's here. We've connected. From here, this is spot. Okay. So I have my support here. I have my slanting resistance. So 1, 2, this is 3. It's gonna break out and does a minor retest. So I'm on 4 hour. If I go on lower time frames, I will get this one, this retest. Then I enter the market. I go down with it again. So there is a disadvantage of entering the market when it just breaks and do not come to retest. You can see what happened here. So people would see the candle right here, it will be very red with momentum, and you think it have broken here. So and then it retraces back again. Then obviously emotions are going to hit you and close your trade. So that's why I say always wait for the market to break and present a retest. Then you enter the market, you go down with it. So this is on GBP CHF. This is on 4 hour. So you going back with my chart. You going back with my chart. Okay, so master the skill and money will follow. Master the skill and money will follow. Okay, we're here. Let's see what we got. Okay, so I have mine here. Descending 1, 2, 3. I enter. It breaks. I wait for my target. So this is basically a descending triangle. Descending triangle. Then let's go back to our drawing board. Let's go back to our drawing board. I hope it's making sense. I hope I'm making sense to someone. Okay. Now move to wedges. Wedges. So wedges. So how do you draw your trend line? I use wicks. I just do not cut candles, but I usually use wicks. It can even touch the last point of the wick, or it can even touch the middle. All I just do, I don't cut candles. Okay, wedge. So I'm now on wedge. So I'm going to do what we call a rising wedge. Rising wedge. Rising wedge. So rising wedge, it is a reversal for a sell. it is a bearish structure, a reversal for a sell. So it is a bearish structure. So you can see price is moving all the way up, and then it started contracting. As it's going up, usually it will be reaching a support. That's when these structures usually form. They'll be reaching at a support or a resistance. So mine is reaching out a resistance, then it's going to break out. It comes back to retest, then retest. As always, we go down 1, 2, 3. So at this stage, you would see I'm not able to sell. Yeah, I'm not yet able to sell. Then when it starts to contract more, like these points about to meet on these two trend lines, when they're about to meet, that's when you enter the market. When you see it's now contracting, it's now shrinking, more as the structure becomes smaller and smaller at the tip. That's when you look to enter. You don't look for the data. So to be safe as always, you wait for a breakout and retest, then you enter the market. But usually it just goes down and do not bring a retest. So always wait for it when it contracts at the top, then you know you are entering. So let's get back to it. Like okay, let's get to our chart. Share screen. I guess you guys can see my screen. Yeah, we go gray. Okay. I draw my structure. Do I have a structure here? Here. Okay. Then goes down. That's a rising wedge. That's a rising wedge. So rising wedge, you look for them at resistance mostly. At resistance, if it's a falling, you look for it at support. Any time frame. So these are back-tested patterns. They've been there before even some of you were even born. Okay. This is another one. 1, 2, 3. It broke out and sold off. Like this, broke out and sold off. So backtesting will help you understand how these structures have been forming over and over and over again, so that you get okay so that you get to know when to enter the market, how often do these structures form. When they form, how do I react to it? How do I enter the market? How do I react, or how do I enter the market? So here, 1, 2, 3. That's when it was more like contracting more. Then it sold off, break out, and come back for a huge. This was a huge retest. Then you enter the market. You can see the momentum because there were more traders waiting for it to do a retest. And then every trader saw the retest here, then it. So the momentum shows that the traders entered more sales on this one. There was more sales. So yeah, this is a rising wedge. This is my second favorite, the one that I most like to trade. It never disappoints me. As always, it never disappoints me. Let me do a last one. Okay. Let me do a last one. Okay, and we'll get a huge one here. Got a huge one here. Nice, perfect, great. 1, 2, 3, enter, broke out, you hold your thread. So this is basically a rising wedge. Okay, let's get back to our chart. Get back to our drawing board. Going to do the last one. Going to do the last one. So this one, everybody knows this. Whether you trade ICT, whether you trade, I don't know, any strategy. If you don't know this, then your strategy does not work. It's worthless. Changes your strategy. If you don't know this thing, then you don't know trading, so to say. If you don't know what a head and shoulder is, you don't know trading. So this is a head and shoulders pattern. Okay, so head and shoulders, here's how it forms. It's going to form like this. At this stage, you don't even know what's forming. It's gonna come back here. You don't even know what's forming. Goes up. You don't know what's forming again. Comes to this stage. At this stage, you now have an idea of what's forming. You now have an idea of what's forming here. Here. So you're going to draw this thing. It's called the neckline. You're going to draw the neckline. So your neckline is supposed to be parallel. Supposed to be parallel to your shoulder line. So this one that I've drawn now, it's called the shoulder line. Drawn the shoulder line. So okay, so the head and shoulders, then it goes up to here. So this is when you start to trade the head and shoulders. If you don't enter at this stage here, if you don't enter the market at this stage here, then don't enter the head and shoulders. Then don't enter the head and shoulders. You need to enter it here. Then you wait for it to go and do a breakout. It comes back to retest and it goes down. So usually people say that the books that I've read and everything, they say you enter the market here. So if you're entering here, guys, you're already late. You need to catch the move here. This is where you catch the head and shoulders. At this shoulder here, that's when you catch your head and shoulders. Then you sell from there. It goes down. You wait for a retest like this. Then you enter the market again. So you have 1, 2 entries. Then there is another secret that I'm going to tell you guys about a head and shoulders. Another secret. So head and shoulders, it's gonna do like this, right? Then it's gonna do like this. I think you've seen a lot of head and shoulders that does not just break out. They do like this. Then finally they break out. Then it comes back to here. Then it sells off like this. Then it sells off like this. So someone was saying in ICT we don't have a head and shoulders. So in ICT in ICTs you usually find this when it's coming from the major or the block, then it breaks and what you call the breaker. So when it comes to retest that breaker, that's when it forms the head and shoulders. Do your homework and find out. You find out what I'm telling you guys. Do your homework, you'll find out what I'm telling you guys. So anyone who guesses here. So what do we have now? Now at this stage, our head and shoulders did not just break at once, it kept on. So if you can see the structure here, it's a flag pattern. You can see the structure here. It's a flag pattern that is formed. That's why at times you'd see your head and shoulders will take long to break out and retest the neckline is because it's forming this. You see, it's actually forming this flag. Then it continues, it breaks and continues to go down in the market. So this is the head and shoulders pattern. That's how it usually forms. Okay, let's get to the chart. Let's get to the chart. Back test on the head and shoulders. Back test on the head and shoulders. Here, let's see what we have here. So also the head and the neckline and the shoulder line has to be parallel. Neckline and shoulder line has to be parallel of the head and shoulders. Then I'm gonna start my body. This is my body from here. It forms the shoulder. It continues to go up there. Then it comes back to here. Forms another shoulder. Forms another shoulder here. Forms another shoulder here. Then it goes all the way down here. So remember what I was telling you about this stage here. Let me show you guys what I was talking about. So here at this other shoulder here, what do we have? I have a pennant, guys. I have a pennant that formed at this shoulder here. I have a pennant that formed at this. This was what I was telling you when I put that flag. I know the market is gonna go down like this. Then it continues down, goes that way. Then there is a pennant that formed. Okay, let me remove some of my lines so that you can actually see. So there is a pennant, then the market is going down. After the pennant had formed, we had another continuation here. We had a continuation pattern after the head and shoulders. So I'm going down in the chart. So you see, you can just trade one currency without pressure using price action, because here at this stage you would have entered based on support and resistance. Then when it continues down, you see your head and shoulders. You enter based on your head and shoulders. When you have entered or based on your head and shoulders, you see there is a pennant again. You have confidence the market is going down. After the pennant, you see there is a continuation again, saying the market will continue to go down. Then you're like 1, 2, 3. You enter the market here again. Then you go down with the market. I don't see why people lose money in the market. So you need to master the skill, you need to master backtesting, then you continue trading. Okay, where we go. Okay. Head and shoulders. So you see, if you have mastered all the patterns in the market, you can actually tackle the market. To be very easy, you gain confidence. So some of the head and shoulders are actually hidden in these structures. You see. Okay, let me see if I can have my head and shoulders here. Okay, no. This is a no. I don't have a structure here. I leave it. You don't want to force it. Structure in the market. You don't want to force a structure in the market. So I leave it. I move on. Yeah. I think I'm getting old. I cannot find the head and shoulders that easy now. Yeah. Okay. Okay. We're here. We're here, guys. We have another one. We have another one. We're here, guys. Um. Okay. This is perfect. So, guys, you can see this is how the structures forms. Okay. Like always, guys. Our head and shoulders. We have a structure. We always have a structure on the last shoulder. Yes. I have a structure here. Break out of that structure again. I've entered based on head and shoulders first here, then a breakout here, then it goes down again. So I have another structure here to confirm my trade in the market. Here, the continuation is coming, goes again, the continuation. I have another pennant. When it broke out, it formed another pennant here, here. So it broke out, formed another, broke out, came back, nearly retested that line, and then it continued going down. You have perfected your head and shoulders. So your head and shoulders, it started here. This is where it started. As you can see, my head and shoulders started here, and this is when if you go here on this structure here, you can see that's when everybody exited the market. This week, this rejection, the head and shoulders hit TP. So when it hit TP, everyone is out of the market. Then there's lots of momentum in the market, lots more of momentum. That's why you see there was this big candle because there were no people in the market now. The sellers are out. We are looking for a new structure from them. So this is a head and shoulders pattern. Okay, somebody is asking me about hiding a stop loss. Somebody is asking me about hiding a stop loss. Right, how do you then hide your stop loss? Okay, so you have to wait for a stop hunt first. You have to wait for a stop hunt first to happen. Then you enter the trade. Stop hunt, then you enter the trade. So if there is no stop hunt, some people say you put your stop loss just above, like I'm just doing it any structure here. They say put your stop loss above here, this just above this. What is this? Just above this week. Then you don't have to put your stop loss above that week because that is what everyone is learning. You now go back, you now look for the last week. So I'm gonna put it here from this last shadow. I don't put it here because the market maker knows the stop loss is just above this level because that's what is everyone is learning. That's what every trader is learning. That's what every trader knows. So I'm now going to put my stop loss above the last week before this one. So that's how you hide your stop loss. So guys, okay, let's go back to your drawing board. Okay, so I've done the most powerful, the ones that I know. So I've only done the bearish part. So you guys, you go do your homework. You look on the bullish part of these patterns. Learn how to draw this. Test your patterns. I know some of you use indicators, market maker, ICT. Those are good strategies, but you need to know. You need to know about these patterns. So I don't know, guys. Any questions that you have? Any questions? Just answer a few questions.
Thank you very much. I was just looking at the charts page, so and I'm seeing that you did clear most of the questions that were rising. Unfortunately, guys, we are running out of time. Now it's around 11:12. So what we are going to do is I would want you to to go and do your homework. Like, remember, today is on a Friday, so we are still continuing with the 14 days. So definitely we might have another part of prize action. So we are going to tackle most of these questions that will be coming in, and also understand that, guys, we won't be able to answer all questions for each and every person, but we'll be able to maybe select just a few questions and answer them. So thank you very much for your time, and thank you very much. Yeah, we are going to upload the video on YouTube as soon as we finish the meeting here, so that you can just go through them and just learn again one or two things. And thank you very much, Komatani, for a very wonderful lesson. I also didn't know anything about these patterns. You know, I used to read them from the books, but they used to be confusing. But the way you showed them today, yeah, it made a lot of sense. So I'm also one person who is going to revisit the videos and check them and see and learn again and again and again and again. Yeah, you really helped me a lot. I really saw a lot of things that I really didn't know. So yeah, thank you very much, guys. Thank you very much. And please, for all those who would want to do prize action, etc. and the like, I think as soon as we end our lockdown marathon, I'm going to post the phone numbers of each and every tutor who was here, and also for all BTMM prize action etc, so that if you need any help, or if you want to subscribe to their services etc and everything, you can just check their numbers. I'm going to post them in my channel, and my Telegram channel. I just posted it on the I just posted it on the chats page. So you are going to see all their contact details and everything. I'm going to share right there, so that you just give them a shout out and maybe subscribe to some of their services, because most of these people, they have Forex companies. So I'll be pleading with them that please come to our platform and help people. So here they are helping people. And when you need to further yourself in these services, they are available. So I'm going to post their contact details and their links to their Telegram channels, etc. So thank you very much, guys. Have a wonderful evening. Cheers.
All right, cheers, guys. Thank you so much for joining.